Good afternoon. It is March 9th. It is daylight savings. We saved daylight. Let's go ahead and start the show.
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you wanna live. Got questions? Here's the place to be. A TikTok Live Mortgage Jubilee. Fix or float, we'll break it down. From city lights to your small town.
Thank you for joining again. My name is Kenny Murden. I am newer to TikTok. I am not new to lending. I've been lending since 1999. And in that time, I've been a good resource for real estate agents and loan officers to structure some of the more difficult deals that they run into. And that makes me well qualified to answer any questions that you might have about real estate, mortgage in general. Feel free to ask away. But as I start every show, I'm pricing out the same deal that I like to price out, which is an FHA purchase here in Texas, single family home, 680 credit score. And I want to see what interest rate can we get with less than a half a point in discount points. Again, what is a discount point? A discount point is 1% of the loan amount. So in this case, about $400,000. 1 point would be about $4,000 in lender costs. So half a point would be less than $2,000 in lender costs. I prefer lower cost to lower rate. We can talk a little bit about that. But as we can see behind me, for less than a half of a point, we can get the 5.375 interest rate FHA. And I'm looking at some of the lenders that are showing up here have been shuffling out. So it's not the same lenders that we're seeing day after day that are pricing out the best. So that tells me that they are competing, which is a good thing. And let's take a look at interest rates here. Looks like oil coming down has helped interest rates come down a little bit. I'm looking at, why don't you see the 4? If I shift it over, it says 4. Why is it cut off? I'm trying to figure out why that's cut off. Maybe if I shrink it. There you can see the 4.102 on the 10-year yield. So we follow the 10-year yield. It doesn't, it's not like dollar for dollar. It just correlates. When this goes down, rates tend to go down. That's why I look at that. And we can see if I zoom in here, and if I move my head out of the way, you can see we're finally seeing some downward action after this long upward action. So that has been a welcomed sign. It looked like oil was just on a runaway train, and there was fears over inflation due to oil spiking over, what was it, 120, and now we're down to 85. So you can see, again, if I move my head, that just kind of rocket ship straight up there. And then now it finally broke and is coming back down, which is not only good news for interest rates, but also for people that are just wanting to travel. I know it's spring break for my kids, and spring break is coming up for a lot of you as well. If you want to just take a road trip and you don't want to fill up on gas that's over $3 a gallon, that's just kind of another little pinch there. But apparently, with the news here on the side, Trump came out and said something about the war ending in Iran and something about we have a lot of oil stock reserves. Again, I don't like to get into the news. I don't care about the news per se. but I do care about how it correlates to interest rates for you. So I keep an eye on the stories that way, but I don't like get into the whole watching the news and feeling all the angst, and I don't give a crap about it, to be honest. So anyway, that is what we're looking at. Interest rates are finally showing that they're getting off of that rocket ship. Housing is a human right and should be free or low cost. I'm homeless and just wanted to ask if someone could get me a meal from McDonald's, proof on page. Okay. I guess those are mortgage or real estate related, so keep them coming. And I'm happy to respond to any of them. Homelessness is not good news. Sorry if that's a real circumstance. I hope you have better days ahead. Let's see, thoughts on potential rise or fall of interest rates in the near future upon war ending. I think that's going to be a good thing because the spending on the war is not sustainable. And so anything that relates to spending is going to cause fear of inflation, and that will be bad for interest rates. The other key thing to look at is the debt ceiling needing to be raised. If that's not raised, we could default for the first time, I think, coming up in June. And that would be terrible for interest rates, but it would also be terrible if the markets just believe that it's possible. So it doesn't have to happen, but if the markets believe it's possible, interest rates could get a lot worse as well. So that's another story I'm looking at besides the war, besides the price of oil. We always hear the same news story, seems like over and over again, with the debt ceiling. But let's see, Colin says, I'm in underwriting now, haven't locked in yet. Hopefully they drop a little more. I'm at 6.075, which is, I'm assuming that's a 30-year fixed, which I believe is probably about right. So if I modify this, change it to conventional, 30-year fixed, I'll say 90% loan to value, single family home, I'm using a 680 credit score. I'll back this out and we'll see where rates are at on the conventional deal. So that's 5.875, but that's kind of spendy. Let's take a look at 6%. %6 is at about a point. Again, a point is about 1% of the loan amount. You're in New York. That's all right. I got partners from coast to coast. It wouldn't be me. It would be Dorota. But yeah, and then we're a half a point at 6.125. So a point at 6% or a half a point at 6.125. So you're right in there at the 6.075, but I don't know what your closing costs are. That's just kind of the rates that I would be quoting today. But based on what we saw today, if I pull that back up, where rates were kind of just going up and up and up, they finally are pulling back here. I'd like to see them pull back a little bit further. You see that little break in the action there. Let's see, could you do one for me? Absolutely, Jared. Let me know what you're looking to price out: FHA, conventional, VA, USDA, what kind of loan, and a little bit more about it. I'm assuming 30-year fixed. If it's different, let me know. What's the difference between PMI and USDA guarantee fees? So PMI refers to the kind of mortgage insurance on a conventional loan, and USDA, just like FHA, just like VA, those are the type of insurance being applied to the lender for the loan. So USDA actually is pretty cheap for mortgage insurance. It's 1% upfront and then 0.35% annually, which is cheaper than FHA and typically cheaper than conventional as well for the mortgage insurance. Plus, USDA typically has a lower rate than conventional as well. Let's see, Minnesota, probably FHA loan because lower credit, about 610 credit, looking at a $600,000 house with $200,000 down. All right, let's take a look. Said about 610 credit and 600, oops, hitting the wrong keys. With 200,000 down. Why isn't that? Oh. There we go. And price that back down. Okay, so at around 140,000 in Iowa, I'm pre-approved for USDA. What would my cost be per month? I'll check that out next. Let's see, modify that. Let's say maybe 6 1/4. Mm, 6 1/4 gets you it's a point, but I like to get it less than a point. So I'm going to look at 6,375 for the Minnesota deal. Yeah, that gets you closer to half a point. Oh, that's with CMG. So they're slow in underwriting right now. So I'd probably go down to this Orion or Plaza to get it through underwriting quicker. But that kind of gives you a ballpark of where you're at. Let's see, Jared. So let me know if you needed. See, payment about $2,500. That's with principal and interest only. So we need to add in taxes and insurance on that as well. So if you want like the full written quote, just take a screenshot of this or text the number up ahead and I'll send you the link and I'll get you the full written quote with all of the estimated taxes, insurance, and all that good stuff. But let's take a look at the Iowa one. Let's see, where was that? 140,000 in Iowa. What would my cost be per month? The payment per month? Let's take a look. $140, and I'm assuming no money down because it's USDA. And did you say your credit score? No, but USDA typically needs something. I'm going to say like 650 on your credit score for the USDA deal, and you can correct me if I'm wrong. We'll go Iowa. And take a look at that. Oh, you're at 680. I'll revise it because that might make a difference. Searching. Oh, we're going to revise it anyway, so I'm going to hit back. 680 USDA 140. Let's see, Iowa. What's it missing here? USDA purchase 140. these in. I'm going to look up an Iowa zip code. 50010. Maybe that helps. I'll try to refresh it. Not sure what's going on. And try it again. USDA 140. I actually have a USDA closing this week. Not as good credit, but I think she's like just in the mid sixes. All right, there it goes. Oh, you're helping me out. I don't think it'll matter. I just picked a deal at random. So it's just per state. But I appreciate the added info there. So we'll see what it comes back with. This time, if it takes a while to calculate, I'll just let it calculate. Broken R7. How soon are you closing on that deal? Because one thing with USDA, it's slower because unlike all of the other mortgage insurance, they deal with their getting the government insurance in place before you close rather than after you close. So that can cause delays. So it's extra important to get everything done in time or to give yourself more time by extending the contract a little bit more than usually it's about 30 days. So if you give yourself 45 days, makes it a little more comfortable. You can always close sooner if it's ready to go. I don't know what's going on with the site. There it comes. All right, so we're probably gonna have to modify that to 5375 because the cost is too high at 5.125. So yeah, you're a little bit over a half of a point at 5.375, and your total payment is $833 plus taxes and insurance. So you figure, I'd say it's less than $300. So you're going to be around 1,100 total payment, give or take, is my guess. I'd have to look up and see what property taxes and hey, that loan girl, I know you. But I'd have to look up to see what the taxes and insurance cost. But I would say, to answer your question, hey, about $1,100 on that USDA deal. Taxes are about 1.39 on average here. So if let's take a look at the calculator. 140 times 0.0139 divided by 12. That's kind of higher than I thought, 162. And then what do you think for insurance? Might be another couple $100 a month, maybe 150. So another 312 on top of the 833 gets you at 1145 for total payment. Let's see, 140,000 household income, credit is 805, currently paying 2,100 in rent in Mississippi. What do I qualify for? I'll show you how to do it. This is just quick math. Take your 140 in income divided by 12. And then I take that monthly income and I divide it in half. And you want to get your total debt below that number of 5833. So any other debts that show up on your credit report. So if you have auto loans, student loans, credit cards, all that kind of good stuff, then you subtract it from there. So let's say you have $1,500 in other debts. then you'd want to keep your mortgage payment in total under $4,300. That would include principal, interest, taxes, insurance. If there's an HOA, everything needs to be under that $4,300. But if you're only looking for 280, I mean, we're well over 500,000 with that amount of payment that you'd be able to approve for. But we don't know if that $1,500 in total debt is what you have. The amount that you're paying in rent right now doesn't really matter, except for the fact that it would be considered payment shock for your payment to go up to the max that you're approved for. And so that would just come into play in underwriting. They might flag that as a risk. So total debt monthly, yes. So your total debt, and a lot of times people don't understand what debt shows up on their credit report. For example, like your credit card debt, your student loans, your car loans, those all show up. But things that don't show up, that we don't care about apparently, are things like Netflix and your cell phone and your car insurance and things. There are a lot of things that you pay for that don't show up on your credit report. So it's just the debt that shows up on your credit report that we subtract and to figure out your approval or your pre-approval. So, but yeah, you're probably way overqualified for that 280, and then we can get you, I can get you a pre-approval letter today if you want. Just text the number above, and I'll send you the link to apply. Let's see, I owe $3,800 on my truck and have less than $2,000 credit card debt, but my fiance, on the other hand, has $30,000. But does she work? She might have income to offset that $30,000 in debt, or we can buy the house without her on it. I got a deal up in Illinois right now where they put on the husband, the wife, the mom, and the dad, trying to get their debt ratio down. And I'm like, well, mom and dad have a lot of debt. They had a lot of income as well. But I was like, let's take everybody off the loan and just go with this one person. And that one is going to approve that way. Yes, she makes $60,000 of the 140. Okay. All right. So what I would recommend doing is applying with both of you on there, and then I can take all of that into consideration to see what gives us the most amount of approval, if it's just one of you or if it's both of you. And then if you're only looking for the 280, we might just go with one of you. Here's an interesting thing though. Let's say you wanted to have both of you on the loan. You don't need her on the loan, let's say, but let's say you just wanted the spouse on the loan. Here's some reasons why you would want to do that. Number one, if they're on the loan, then it helps build their credit as well. You're both making the monthly payment, but this way it'll show the monthly payments on both of your credit reports, so you're both building your credit score. That's one reason why you'd want to opt to have both of you on there. Another reason is in case something happens to one of you, the unfortunate, hit by a train or whatever you want to call it. The anvil falls on your head, you're taken out. The other person doesn't have to worry about having to refinance or do some kind of, changing around the loan amount. Now, I've seen this in real world. Not all services will make you refinance. So I saw a married couple where the guy died. He was young. He was in his 40s. He died, and the surviving spouse was not on the loan, and the servicer did not make them change anything about it. They said as long as the payments are made, they're not going to, enact the escalation clause, which escalation clause just means that they can call it due, and that would make her have to refinance or sell the house. And they said they were not going to do that. So real world plays out differently sometimes than the textbook on what could happen, what servicers could call for. But those are some of the reasons why people might want to opt to have both of you on, even if you're not needed to both be on there. But as far as me putting the loan together, a lot of times it's the least amount of information that we give underwriting makes it the easiest typically. So you say I can text the number above or call. Absolutely. Obviously on the live, I'm not going to answer a phone call, but you can text anytime and I'll reply with the loan application so you can get your information in. Again, I would start with both you and your spouse, and then we'll look at what our options are, what you both approve for. Yep. Appreciate it. Good questions. Had a few deals to price out there right off the top. So we were looking at some conventional pricing that was around 6%. And then we were looking at some of the government financing, USDA and FHA around 5.375 with about a half of a point in discount points, which is half of 1% of the loan amount. So if you're looking at a loan amount of about $400,000, that's about $2,000 in total lender costs. But other than that, I'll just say if anybody has any of their questions about mortgage or real estate, feel free to put it in the comments, or if it's a private matter, go ahead or if you want a written quote with line by line everything shown, either way, you can text me above and we'll be able to get that out to you. It typically takes about 20 minutes to do a pre-approval, but the reason why it might take more than a day sometimes. Oh, thank you for the new follow. I've been watching those because I'm so close to going across 2,000. It's just, every landmark matters, right? So as you get closer to a new landmark, it's kind of a fun thing. But I've been on here since about October-ish. And so I guess that's how long you get to 2,000. So would you recommend first-time home buyer or USDA? This is for Mississippi. I'm ignorant to homeowning, but need to get serious about it this year. I think USDA is the hardest loan to approve for. You using their program, you approve for the least amount of house given the income that you have. You making $140,000 for your household, you better have a bunch of kids or you make too much money. So that's one thing to look at when we're looking at it. But if you approve for it, like I was telling that gal in Iowa, it's a really good loan. You have an interest rate lower than conventional and mortgage insurance that is cheaper than conventional and FHA. So it's a good loan to get. The only things about it is you want to make sure you have enough time in the approval process, because sometimes the USDA gets a little bit backed up and they take a little time in review. I have one right now where they've kicked it back now twice, and so we're having to extend the closing, and that's just nature of the beast when it comes to dealing with USDA. But everybody typically knew ahead of time, because we were able to communicate that to them ahead of time on both the buyer side and the seller side, so we could manage expectations that way. But at the end of the day, it's a great loan to have, as far as affordability goes, because they just want to make sure that you're setting yourself up for success. Where the opposite of that, FHA, they'll let you get into financial trouble. Like they will allow you to buy the most amount of house with the same income. So a lot of times I'll be telling somebody they approve for $200,000 for USDA, or they approve for over $400,000 on FHA. Like it's night and day difference. You can approve for a lot more house with FHA, but if you can afford to, or if you can approve for a USDA loan, you're probably able to afford to make the payments, because it's a really conservative way of approving for a place. And then also the only thing different really with USDA is if it's on well water versus city water, then you need to get a water test. That's the same thing for VA as well. If you have well water instead of city water, USDA and VA make you get a water test, but all the rest of it is all the same. It's a government insurance loan. So they're going to look at things like chipped and peeling paint, like minor fixes will need to be addressed if the house is not in tip-top shape. Whereas conventional, like as long as the house isn't falling down, they'll pretty much approve it. I think the actual term is as long as it's not a health or safety risk, then they'll go ahead and finance a conventional loan. So those are some of the differences. So we'll look at not only the condition of you, the buyer, but also the condition of the property and what makes sense as far as what loan type we're going to go with. So hopefully that helps. But I see a few more people have kind of been scrolling through here. So I'll just reintroduce myself as I'm Kenny Murden. I'm newer to TikTok, got started doing this in October. Thank you very much. Looking forward to your text. Appreciate the follow. So I got started lending back in 1999. And in that time, I have been a good resource for loan originators and real estate agents to structure some of the more difficult deals that they run into. And that makes me well qualified to handle any questions that you might have about real estate or mortgage in general. In addition to doing it as a profession, I've also purchased a lot of homes over my career. Some of them for just homes that I lived in, some homes that I rented out on a traditional long-term lease, and sometimes we would buy places that are more vacation type rentals for short-term rentals, Airbnb, things of that nature. So if you have any questions about any of that stuff, or something more obscure like commercial, or I'm a big advocate of multifamily, coming from we had a whole bunch of single family homes that we had long-term leases on, and it would have been more convenient to have them all centrally located at one place, so you can just have one inspection rather than multiple inspections all over town. So if that's something that you're looking at doing, is becoming a landlord or increasing your real estate portfolio, that's one thing to consider, just kind of the ease of use of being the landlord. Do you want to have it managed all over the place, or have more units at one location? Definitely a consideration for sure. We were also self-managing. So that's another thing. As long as you have enough cash flow in the property, you can always hire, thank you for the likes. You can always hire a management company to take care of it for you. But that always makes me nervous, because sometimes they, I don't know. I've seen friends rent places out and have management companies do a poor job, and that makes me nervous. So they'll claim some expenses when they're not really expenses. Like they'll say a bunch of pillows went missing when they didn't, just to charge you, or just little stuff, but it adds up. So you have to kind of I don't know. And then if you don't trust them, then it becomes another issue where it's like, are you going to spend time to micromanage the people that you're hiring to make the managing of the property easier? I don't know. But I'll bring this back up if anybody has any scenarios that they want me to price out here live on TikTok. I'm happy to do so. We were looking at pricing for conventional and USDA and FHA. So we had a few different scenarios here. Let's see, does Saturday count as a business day? Yeah, it does if you're asking about the days that they count for, the days for like a rescission period, or for disclosures. Yeah, Saturday definitely counts unless there's a special holiday on a Saturday. I can't think of any holidays that run on Saturday. But yeah, it counts. How about construction loans? Happy to talk about that. Yeah, the 7-day cooling period, 7 days, Saturday counts for sure. Anyway, I can save this and watch it later. Yeah, if you check me out on YouTube, I repost the whole hour on YouTube, and it's just Mortgage Talk with Kenny. Mortgage Talk was taken on YouTube, so Mortgage Talk with Kenny is my YouTube podcast, I guess. But what is the question about construction loans? Typically for construction loans, I do one of two ways. I'll either refer you out to a bank that's going to do the construction side, and then I would do the end loan, or I can do a one-time close construction loan. But it ends up being about 2 loans anyway, just because the price of it is so much higher than market rate. You end up refinancing right away anyway. So we could look at either way of doing it. But either way, whether the name says one-time close or whether we do a construction loan and then an end loan, you end up doing 2 financing closings anyway, in my experience. If I have a 628 score and I got a 6% rate, how do I calculate what my mortgage payment would be? I need to know what your loan size is at the 6%. So it sounds like your question is wanting to know, okay, so 492 at 6%. I'll just pull up an amortization calculator and go 492. Assume it's a 30-year, 6%. Calculate that. Monthly payment $29.50 about, plus your taxes and insurance. So depending on where you're at, typically 492 might be Nevada. They have lower insurance. I don't know what the taxes are over there, but not as many like storms and things. So I don't know. Let's take a look. Let's go check out Zillow. I'm 100% service connected. Do you help in? Yeah, we can help in every state. My team covers 48 states, and then the other 2 states I have people outside of my company that I can refer you to. Using a VA loan in Nevada. Okay, I didn't price out VA yet today, so we can definitely do that. But I want to see. Looks like I've been looking at Buckeye Lake, Ohio. I know who that was for. Shout out to Hannah. Let's see, probably. I'm just going to take a place at random that's around your 490 price. Whatever, what's this place? See what it says for taxes and insurance. This has a HOA. I'll show you it. I'll go like this. The quicker way to find what I'm looking for is to find realtor.com. And then monthly. Yeah, I like this better. So they're saying property taxes about $387 and home insurance about $135. So about $500 over $29.50. So what's that? $3,400, $3,450. How much house can we afford? 140,000 income, no debt, 650 and 800 score. So if we go with 140,000 divided by 12, and then I divide that by 2, we'd need to keep your total mortgage payment under $5,800 about, and that needs to cover everything: taxes, insurance, mortgage, and interest, whatever, everything, HOA. So I mean, you're probably going to be well into the 600,000s, if not 700,000, especially if you have down payment. It might be a little higher. Let's see. I'm 100% disabled. Do I get a break on the property tax? I'd have to check that. That's definitely a yes here in Texas. So I would have to check with your county in Nevada, and I'm happy to do so. And if not like 100% relief here in Texas, they'll give you up to your first $16,000. So if you were to buy a mansion with really expensive taxes, then it doesn't cover 100%. But every VA loan that I had here in Texas that they were 100% disabled, there was no property taxes owed. But Egg, if you want, text me and I'll do the legwork with you and for you to make sure that we get you that answer. Let's see, 460 would not get me anything like that in Connecticut. Oh, right. Yeah, I know there's, the coasts are tough. There's places here in Texas where 460 doesn't get you much. Let's see, do you recommend FHA or conventional? It depends on yes. So your situation, I would probably go conventional for a couple reasons. You don't have any debt. So your top end ratio is limited on an FHA loan to 46% or 46.9%. But on conventional, you'll be able to go to 50%. So I'm guessing you'll probably approve for more house if you go conventional. But if you go FHA, you're going to have a lower payment for 2 reasons. One, you're going to be under that 46.9%. And for 2, you're going to have a lower interest rate. Even with the higher mortgage insurance, your FHA payment is going to be lower. You're going to be able to buy more house at a more comfortable payment if you go FHA. But then you also have to contend with the condition of the property. So just make sure when you're writing up the offer that somebody agrees to fix the little things that might be called out by the appraiser, whether it's chipped and peeling paint or a missing screen or a screen has a rip in it. It's usually minor crap that gets called out, but just make sure you address it in the purchase agreement ahead of time. Let's see, is it fixed interest on FHA? Yeah, both of them have fixed interest. If I get disclosures today, when is the soonest I can close? For the 7-day cool period, let's take a look here. 1, 2, 3, 4, 5, 6. So it'd be next week, the 16th. Egg is my counting of that. Let me bring that over here. Where I'm counting today is day 1. So 1, 2, 3. Oh, you don't see my mouse. Let's see if I point on the screen. 1, 2, 3, 4, 5, 6, and then you can close on the 7th day, which is Monday. So that's if disclosures are out and signed today. And then if it's the final closing disclosure, you only need 3 days. And then if it was out today, it would count today. So 1, 2, 3, and then you could close this Thursday. So should be pretty easy. What do you think buying power would be if my household gross is 205 and the car is 631 per month? Let's take a look. 205 divided by 12 divided by 2 minus the 631. You would be able to get a mortgage payment up to 7910. So you're probably around 900-ish thousand with very little down payment. Or if you have down payment, you might get all the way to $1 million, give or take. Let's see, wait 3 days doesn't happen at the same time as the 7. So the 7 is from the initial disclosures, but there's a 3-day waiting period from the final closing disclosure. So it depends which disclosure we're talking about that's going out. Getting a home, the house is $375. Me and my wife have a combined $170 and only have $6,000 for the down payment. I wouldn't worry about down payment. There's so many down payment assistance programs right now. The way I say it is I've never seen more down payment assistance programs than I've seen now. But 170,000 combined divided by 12 divided by 2 minus whatever debts that you have out of the 7,000 per month should well qualify you for the 375 house that you're looking to approve for. Again, I can do pre-approvals in 20 minutes as long as I have the income documents. The only time it takes longer is if I'm waiting for documents. But if you text me to the number above, you can take a screenshot of us talking here so you can do it later. Or if you text right now, I'll get you an application link. You go through, it takes like 5-10 minutes to just put out who you are, where do you live, where do you work, how much do you make, that kind of thing. And then I'll email you the documents that I'll need to get the pre-approval. Once I have that, I issue the pre-approval letter right there. It's pretty simple. We had disclosures, then our lender moved to a different company, and now they have the 7-day thing. Okay, I got what you're talking about there. They probably had like a better rate lock somewhere else, so they had to start over with the initial. If they did that today, then yes, you can close next Monday as long as they don't miss a beat. They need to get that final disclosure out. That'll be like the only thing that could screw that up. It might go a little longer. We are starting to look again in July. Got to go through pre-approval again. Not necessarily. You just need to update your paycheck stubs. I mean, we need to document where the down payment's coming from. So I have people that have been working with for over a year, and they're like, hey, I need to update my pre-approval letter. We talk about, did anything really change? Are you working somewhere different? Did you get a raise? Did you lose a job? Did you change your income? We just get a little check-in. But pre-approvals are good for 90 days. So if it's beyond that, then we just need to have a little check-in. It's not like starting all the way over. So I would say it's better to be acting early in case we find something where a little tweak could make a big difference down the road. So I wouldn't ever advise somebody to wait. I would say figure it out now so we'd be able to tweak it in your benefit during the time we have to wait. See, I don't even know. Ugh, our lender is dragging his feet. Sorry to hear that. I'm happy to light a fire under them as, we're all worried about competition. So if they think, for Connecticut, I have partners in Connecticut. I have partners across the whole country. So feel free to reach out. Does it matter what time we get them today? You need to have your disclosure signed by midnight in the time zone that the house is in. It's 3 where I am. Does getting and signing those disclosures at that time affect the 7 days? As long as they're signed by midnight where the property is, that day counts. And it's fine. Actually ask me the same questions over and over again, because the more comments I get, the better the algorithm likes me. So I'm happy for a dual question. Appreciate it. So hopefully that answers everything. I think you're in good shape. I mean, I would hate to actually take one away from that lender that had it all done and is starting over. But if you need, I could light a fire under them. Tomorrow is day one. Wrong. That's fine. So it's 8 days instead of 7. Yeah. You know, a fun thing is everybody has access to AI now, so you can throw up fun facts. I'm very good at what I do, but every once in a while I'll have even a pretty green or a new loan originator come up with something that outsmarts me, and I'm like, dang it, you're right. But there's a lot of stuff to keep track of in the lending world, a lot of nuance and in the weeds stuff. But if you want to hold their feet to the fire, ask the question in AI, get the answer, send it to them and say, well, it says here that this is day one, as long as it's signed by midnight tonight of the property's location. So please get me those disclosures so I can e-sign them. So I appreciate that. And I'll go ahead and reintroduce myself for the, and I should actually, within 10 minutes of the end of the hour, I always like to say last call for comments or questions, mortgage related, and I'll bring up on the screen here again, if anybody wants a loan priced out, I'm happy to do so right here live on TikTok, and we can go through different scenarios, whether it's conventional, VA, USDA, FHA, jumbo, whatever. There's some of them, like the non-QM stuff is a little bit harder to price out. Doesn't price out well here. So if I run into somebody that's like, hey, what's the interest rate on a DSCR deal or a bank statement as income deal? Those ones I typically need to go and manually check with the different lenders that we have. We have over 300, or not quite, almost 300 lenders that we're signed up with. And, so I'll just go and blast out to like my favorite 20 or so in whatever scenario we're looking at. And then they'll get back to me within the next day or less, typically, sometimes within an hour, depending on right now it's later in the day. So it'd be tomorrow. I'd come back. ChatGPT confirmed what I said 100%. Then copy that and send it to them. Let's see. I'm sure other 19 hate that. Yeah. But it's banks compete, you win. Like, I'm pro broker. Actually, tomorrow morning, I'm going to be on with a guest from, I think, Goosehead Insurance. And so they are an insurance broker. And so the same concept here, where I put in one application, I get all of these quotes. Honestly, they're just happy to quote. So they're happy to be one of the 20 that I reach out to. And they know that they need to have a sharp pencil if they're going to win my business, because my feet are held to the fire by you guys to say, you have to give me the best pricing, the best service. And because you demand it, I demand it, and so on and so forth. And so I'll let them know, hey, let's see, didn't respond. Oh, okay. Got the text message. Thank you, Madison. But yeah, so basically I was just talking about the competition. It's healthy, they're just happy to be one of the 20 sending a quote. Let's see, I do the same job, just saying 20 is too much. Okay, that's fair. Let's see, how long does manual underwriting take? It's usually like, instead of 1 day turnaround, sometimes it's 2 days whenever we submit things to underwriting. But some of them are same day. So it's pretty similar. It might add an extra day, 2 or 3, if it's a manual underwrite. To have it done quicker means that whoever's in my seat or the processor's seat or the loan officer assistant seat is doing a better job getting it buttoned up, making it easier for the underwriter to sign off on it. Just paid off a bunch of debt. Would that cause any holdup? What you'd want to do is, if you have a letter stating that the account is paid off, have that available to give to your processor or your originator, and have your score may go up. Probably not yet. If you just paid it off now, it probably isn't going to go up until mid-April, because it's not like a constant thing that they, I guess, run. No, it did. We paid it off last month, so it went up now. Okay, well then there you go. Then if you have reason to believe that your score improved, ask them to repull your credit so you get credit for the better score, especially if your score was below 600. So if it's 628. Yeah, so he pulled it today. Perfect. Awesome. That's good. You did it right, because every 20 points makes a big difference. So from 580 to 600 is one bucket, 600 to 620 is another bucket, and those are key buckets. Once you get over 640, it slows down for how much cheaper it gets. We were supposed to close on the 13th. Well, I apologize about that. Let's see. Looks like that's not going to happen, but sometimes next week. And honestly, sellers typically are pretty understanding within a week, because they're really, they're not going to be able to sell their house any quicker to anybody else, even if there was a backup offer. If that backup offer was all cash, maybe they could close on it sooner. But typically a week is pretty easy to get. They're moving into a new build, so I'm afraid that they'll get fined. Yeah. Nothing you can do about it though, right? You're going to try and get to the closing table as soon as possible. That's your end of the bargain. There could be that negotiating because you're over your contract date. Your realtor told us they could get fined. Yeah. So I would say, continue to do whatever you can. Say, we really want to get the property. If they come back and try to negotiate a fine, I mean, it's up to you to say what you're willing to do. When I bought this house that I'm in, the one of the AC units went out. In Texas, AC units are big. So it's like a 5-ton unit, and I think it was like 15 grand, and we ended up splitting it with the seller. Our lender is actually in Texas. A lot of us are in Texas. I have the Minnesota phone number, because that's where I was for the first 40 years of life. But I got down to Texas as soon as I could. But yeah, I mean, just negotiate it, as best you can. You want your realtor to fight for you. I understand if they're saying, the other side might be facing a fine. It might be costing them more money by extending. The counter argument to you is that that there's no way, if you cancel the contract and you have to walk away from it, there's no way they're going to be able to close with anybody else within a week. So you should be on pretty safe ground. They close on the 16th. Oof. Well, now you're armed with the paperwork to your lender to let them know that the date starts today and not tomorrow. So that helps for one day. And then we know Saturday works. So next Monday is the 7th day. So 2 more days past the 17th. Yeah, with it being a manual underwrite. But I don't know. It's still in the world of possible. So, if I were in the driver's seat on this one, I would definitely. Oh, you don't know if it's manual yet now because your score went up, right? So Yeah. What you think about buying around June with this Iran war right now? Well, we just had good information about, Trump was coming out saying, the war is practically over or something like that. Oil came way down. They also said that we're taking over the Strait of Hormuz. What I'm more concerned about with June specifically is the story about the debt ceiling. If there's even a possibility of us defaulting on our debt, mortgage rates are going to suck. So that's the other story to keep an eye on as far as the June timeline goes. What's the average percentage for a down payment on a home nowadays? I'd say my personal average is pretty low. A lot of down payment assistance programs. USDA and VA obviously are really easy to go down to no money down, but there's no money down FHA programs. There's 1% down programs for conventional. Now, if you have the 3 or the 3.5% to put down, you're going to have a much better payment because the down payment assistance programs tend to be a little bit more expensive on your payment. But yeah, you'd pretty much get by just fine with 3 to 3.5% down. What does an automatic underwriting process look like? It's just a computer system. So we're literally just uploading your information into a computer, and it looks at the different, it's basically kind of like AI, only we've been using it for, years and years. But it looks at the whole file to say pass or fail. And if it says pass, it's stamped as an automatic approval. If it says fail, that doesn't mean denied. It means we have to go and fight it on a manual basis before it would be denied. And obviously, it sounds like you are going to be approved on a manual underwrite, so that could only be improved if you get an automatic approval, which I hope you do. Good job on the credit score. Let's see, haven't heard that yet. Thanks. Yeah, I just heard that last night about the debt ceiling fight is back and active. Could we go through with that 628? Yeah, you could get an automatic approval at 628. If you have assets that you haven't shared with them, share them with them. I don't care if it's retirement funds. I don't care what it is. More assets will help an automatic approval. Paid off $14,000 worth of debt. Good job. Love it. Awesome. Well, appreciate all that. I'm past my hour. I'll say last call for comments or questions. Otherwise, we'll close it out. And tomorrow morning, again, I plan to be on 10 a.m. Central with a gal from Goosehead Insurance, where she can talk a little bit about the benefits of working with an independent insurance company, where they do kind of the same concept as me. One application gets priced out with all of our different lenders. We have almost 300 lenders that we work with, which gives us more access to more loan programs, but also more programs at a lower rate. So just trying to be price competitive and deliver good service. That's our goal. So with that, I appreciate you guys. I hope to see you tomorrow. I'm going to close it out with a new outro that I just added today. So I was playing around with this earlier.
The market's moving, the rates are live. We're helping you through the 9 to 5. From application to keys in your hand, making home owning the best in the land. That's another rap on Mortgage Talk, helping you with your closing walk. From Texas to your hometown, we're keeping it real, making sure you get the best deal. Hit the follow, don't miss the next show. We got the answers you need to know. Mortgage or cash, whatever your way, we'll see you back here for another day.
Thanks for hanging out on TikTok.